look at this chart for 1 second and tell me what you see. A stock just almost lost 2/3 of its value in the less than a year. Not a meme coin, not a startup. This is the Trade Desk, a real company on the Nasdaq. While everyone slept on it, it just jumped 6% in a single day. Let's rewind to September of last year. The Trade Desk was trading above the $55 share. Back then, the chart looks calm, almost boring, with small green and red candles. Then something shifts and stock starts sliding lower week after week. By December, it had already dropped under the $40. By February, it broke below the 30. That's not a small dip, that's a stock losing almost half its value in 5 months. And chart never really stopped after that. It kept grinding lower. Now look closely at these little market points on the chart. Those are earnings days. Right after that, several of these earning days, you can see sharp, fast drops. One candle in March falls from around $32 to under 26 in a single session. That kind of move tells you something big happened in the how market reacted that day. You can also see the tall spikes in the volume bars at the bottom of the chart. Volume spikes like that usually means a lot of traders were buying or selling at once. This pattern, a sharp price drop paired with volume spike, is something every chart reader should learn to spot. It doesn't tell you why something happened, but it tells you that something happened. Fast forward today, the stock sits around $18.37. That is a long way down from the $55 level we saw back in September. But today's candle is green and it is a strong one. The stock opened at $17.40, touched high of the $18.47 and closed near the top of that range. A 6% move in one day is not something you see every week. Even pre-market numbers is showing the $18.53 slightly above the closing price. Volume today is sitting at over 27 million shares traded. That's a meaningfully higher than quite average trading than for this stock. So what can we actually learn from that chart like this? First, big trends do not last forever. This stock fell for almost a full year straight. Second, earnings days matter and they can move a stock far from more than a normal trading day. Volume is a clue. When it spikes, pay attention because the crowd is reacting to something. For one green day after a long downtrend doesn't automatically mean the trend has reversed. Charts show you what happened and what is happening right now. They do not promise what happens next. Reading a chart is like reading a story that is still being written. I'm not here to tell you to buy or sell anything. I'm here to show you how to actually read what a chart is telling you. If you find this breakdown useful, that's exactly the kind of the thing I want to keep doing. Drop a comment and tell me which part of this chart surprised you most. And if you want more chart breakdowns like this one, make sure you are following because this is just the beginning.